dear students, hope you all have done the homework which was given yesterday, that is till question number 14. We'll be seeing next two illustrations. You are already done till illustration number 7. So today I'll be explaining you illustration number 8 and 9. Children, have a look at illustration number 18. Bhavani Traders purchased a machine on for 50,000 on 1st Jan 2010. It's always better before you start writing the solution to make a rough. Just see when was it purchased. On 1st of Jan 2010 a machinery was purchased for 50,000. Then what has happened, have a look. Another machine was bought on 1st Jan 2011 for 60,000 and used from 1st July 2011 onwards. So the next year on 1st January 2011 another machinery was purchased for 60,000, but it was put into use from when? From 1st July 2011. This means what? The second machine which was bought, it was not used for the first 6 months and it was only used from 1st July onwards. If you see the continuation, the depreciation is provided at 10% per annum under straight line method. What is rate of interest, rate of depreciation? 10%. Okay, so this 10% will be calculating on these machinery, children. Till now in illustration you have dealt only with one machinery, how to do the accounting, but here you will see that in case if two or more machineries are there in an organization, how depreciation is to be charged. What you have to remember, children, depreciation is always charged separately on both the machines. If we take the first machine, 50,000 by 100, this is our first machinery, and let us say this is our second machinery, 60,000, that is the original cost of the asset into rate of depreciation. The zeros will get cancelled. So this is our amount, rupees 6,000 is the depreciation which should be charged per annum on second machinery. And if you see the first machinery, cancel the zeros, you will get the depreciation as 5,000 rupees per annum on first machinery. Now what they are telling here, the books are closed on 31st December every year. So what is our accounting year of the organization? Jan to December. Every year the books of accounts will be closed and the calculation will be done for the months from January to December. Here we are asked to prepare the machinery account for how many years? 3 years. That is, we will be preparing the machinery account for 2010, 2011 and 2012. Okay. Now let us prepare the machinery account. In the books of Bhavani Traders. Which asset is this? This is machinery. We are preparing machinery account. Under which method? Straight line method. You will write debit and credit and then you will start the format. Date, particulars, journal folio, amount, date, particulars, journal folio and amount in rupees. Okay, so if you see the dates, what has happened on 1st 2010, first year we were preparing. January 1st, what did we do? We bought a machinery, so we will write it as to bank. For how much did we buy it for? 50,000. And 2010, by end of the year on December 31st, we have charged depreciation. I am writing in short, you please make a complete note. So for the first machinery, how much is it? 5,000. We'll write it here. Okay, so 2010 only this much has happened with the organization. So we will make the totals. Debit side is more. The same will be copied on the credit side, but credit side it has got a deficit amount of 45,000, which will go under the heading of by balance carried down, which will go to the next year. So this means that the machine which was bought on 2010 for 50,000, we have used it of a value of 5,000. By end of the year, the value of the asset was 45,000. So the next year, that is 2011, what all things have happened, let's see. On Jan 1st, we will bring this balance carried down as balance brought down 45,000. But if you see in the illustration, it's also given that on 1st of January 2011, another machinery was purchased for how much? 60,000. So you'll put it as Jan 1st to bank account. We have bought that machinery by paying check. 60,000 you will put. Now by end of the year, you have to charge depreciation for both the machineries. The machinery with the worth of 45,000 and the machinery which you have bought for 60,000. So 31st December, you will write by depreciation account. Here you will show the working children. Rupees 5,000. It means during this year, both the machineries were used in the organization. The first machine was used completely. So we will take complete 5,000 as the depreciation amount, plus the second machinery which we have already calculated, and per year on that depreciation the value of the asset will reduce by 6,000. But then if you see the illustration carefully, it is said that though the machinery was purchased in the month of January, but it was started to be used from 1st of July. It means the machinery was not used for 6 months. And what does depreciation says? Depreciation says that only on the usefulness of the machinery the depreciation should be calculated. So it was there in the organization during that year 2011, for 6 months only it is used. That is July, August, September, October, November, December. December 31st we close the account. So if you count these dots, you will get 6 months. So 6 months on 6,000, how we will calculate? Per year, 6,000 is for 12 months. So how much will it be for 6 months? Cross multiplication, children. 6,000 into 6 by 12. 6 ones are 6, 6 twos are 12, 2 ones are 2, 2 3,000s are 6,000. Okay. So depreciation during this year on second machinery is 3,000. Now you will make the total of both of them. You will get 8,000. Okay. Here for 3,000 you should write for 6 months clearly in the brackets, so that for the examiner it will be very clear. Now what has happened on 31st December, we will make the total on both the sides. You will get 1,05,000. The same amount we will put this side also, 1,05,000. But there is a deficit of how much? After deducting 8,000 from 1,05,000, you will be left with 97,000. 97,000 is the value of both the assets, 45,000 and 6,000. All right. Okay. Now we will see the next year. We are asked to prepare the accounts for 3 years. 2012 Jan 1st, we will bring this balance carried down to balance brought down, that is 97,000. During this year, both the machines were completely used. So we will take depreciation completely for 1 year. Again you will write by depreciation account. 5,000, show it in the brackets, 5,000 for the first machinery, 6,000 for the second machinery. We are not given anywhere in the illustration that the machinery is sold. So we will not do any accounting pertaining to the profit and loss on sale of the machinery. So when you add, you will get 11,000. Okay. So by the beginning of the year 2012, both the machineries, they valued 97,000. Throughout the year after their usage, their value decreased by 11,000. So by end of the year of 2012, the left by balance C by D. This is the actual price of both the assets by end of 2012. 97,000. So here we come to an end of the solution, children. We are asked to make it for 3 years and we made it for 3 years. So next year we will just show it and leave it over there. On 2013 January 1st, to balance brought down how much? 86,000. It means by the beginning of the 4th year, both the assets they have valued to 86,000. Okay, you can have a look in the textbook how it is solved. Beautiful chapter. Remember 5 marks. Keep them in your hands. Look at the working notes, how beautifully, clearly it is being mentioned. And in the same way you should also do, children. The first point you are familiar. Have a look at the second one. The second machine was purchased on 1st January 2011 but started working from 1st July 2011. Hence the depreciation is calculated for 6 months only. That is from the date of use to the closing date of the year 2011. Depreciation on second machine for 6 months. 60 into 6 by 12, 3,000. It's not 60,000, children. It has to be 6,000. Okay, that must be a printing error. It is 6,000. Have a look at illustration number 9, dear students. I will take the first reading for you. On 1st July 2011, Anupama Traders purchased a machine of the worth of 80,000. On 1st April 2012, the firm purchased another machine for rupees 40,000. On 31st March 2014, the machine which was purchased on 1st April 2012 was sold for 29,000. The firm writes off 10% depreciation on original cost and the books are closed on 31st March every year. Show the machinery account for 3 years. This is your question, dear students, and as I said before you proceed with the solution, always you better make a rough of what exactly is given in the question. If you see in the question, they have said on 1st of July 2011 Anupama Traders. So we are writing the accounts in the books of Anupama Traders. And what is given on 1st of July 2011, a machinery was purchased for 80,000. After that, on 1st April 2012, another machine was purchased for 40,000. In continuation, if you see, on 31st March 2014, the machine which was bought on 1st April 2012 was sold. So, okay, in 2014, sales has happened, a machinery was sold. Which machinery was sold? The one which was bought on 2012, means this machinery was sold. For how much amount did they sell? They sold it for 29,000 rupees. Okay. Then the firm writes off 10% depreciation is given and the books are closed on 31st March every year. So what is rate of depreciation? We have 10%. And what is the accounting year? Accounting year is 1st of April to 31st of March. Okay. Till now, till your previous illustration, you have seen the accounting year of the organizations which follow Jan to December. But here Anupama Traders, they close their books from April to end of March. Okay. Alright. Let us calculate depreciation first. Rate of depreciation is given. First machinery is of 80,000 rupees. 1,000 rupees. We will multiply it with rate of depreciation which is given, that is 10 by 100. Cancel all the numerator and denominator zeros. So first machinery, you have to charge 8,000 depreciation per annum every year. Now let us have a look at the second machinery which was bought for 40,000. Rate of interest given is 10%. So 40,000 into 10 by 100, you will get 4,000. So the rate of machinery to be provided on second machine for the accounting year April to March is 4,000 per annum. Now let us prepare the machinery account. We are asked to prepare it for 3 years. We are writing it in the books of Anupama Traders. Books of Anupama Traders. Next, we are preparing the machinery account. So you will write it as machinery account. Under straight line method, debit, credit. For the first year 2011, we will write 2011. On 1st of July, if you see, we purchased a machinery, that is to bank account. This is our date, children. Particulars to tell about the format, amount in rupees. I am writing in short, you please don't do that, and make sure that you write the journal folios too, and amount in rupees. Okay, so bank account, how much we have spent on the first machinery? 80,000. Okay, by end of the year we will have to charge the depreciation for the year 2011. If you see carefully, when was the machinery purchased? In the month of July. July 1st onwards we are using the machinery in the organization. So July, August, September, October, November, December, the whole January we have used, Feb, the whole March we have used. What is the accounting year? 1st of April. So till March only we will see. So have a count of these dots: 1, 2, 3, 4, 5, 6, 7, 8, 9. So in the year 2011, the machinery which was bought, it was used only for 9 months. The first machinery we have already calculated the depreciation, it is 8,000. Now you will have to calculate 9 months on 8,000. 9 months means 9 by 12. 3 3s are 9, 3 4s are 12. 2 2s are 4, 2 4,000s are 8,000. 2 1s are 2, 2 2,000s are 4,000. 2,000 into 3, it is 6,000. Okay. So the depreciation for the first year end on the first machinery, depreciation account, how much? We will write it as 6,000. Though it is 8,000 which we should write, but then the machinery was only used for 9 months. Here in the calculation just show 8,000 into 9 by 12, or you can also write 4 for 9 months. Okay, any of the ways you can do. It is a description of this calculation of 6,000. Now you will make the total of both the sides, because nothing much has happened more than this as per the illustration. We will put 80,000 on both the sides. On 31st December, by balance C by D, that is the value of the machinery at the end of the year after its usage, is now 74,000. Okay. The next year, that is 2012, we will write. Accounting year is from April to March. Here by mistake I have written 31st December, children. It should be 31st March. Okay. So here in 2012, on 1st of April, what has happened? We will bring the balance down of our first asset, balance brought down. What is the value of the asset by the end of the year? 74,000. Same you will copy here. Okay. Then what has happened? On 1st of April, initially in the beginning itself, a machinery was purchased during the year 2012. So you will write to bank account. How much did it was bought for? It was bought for 40,000. Okay. 1st April it was bought. It means both the machines are completely used in the organization. So by end of the year in 2012, you will write depreciation 31st March by depreciation account. First machinery 8,000 plus 4,000. So 8,000 plus 4,000, total 12,000 you will charge here. Now do the totals on both the sides. You will get a deficit balance of 1,02,000. How? Total of this, that is 1,14,000 minus 12,000, you will get 1,02,000. Okay, now in the year 2013, this balance C by D amount, we will bring it down to balance B by D. How much is it? 1,02,000. 2013 we are doing by end of the March. Okay. In the rough which we have already made, in 2013 nothing has happened. So we will give away the depreciation equally. Only in 2014, the second machinery which was sold, we will have to calculate whether it was a profit or a loss. So let us have a look. Okay. There is a small correction in the question, children. Here it is given that in 31st March, the machine which was bought on 1st April 2012 was sold for 29,000. Here you will have to make a correction if you have your textbook, that it is 2013 when they sold the second machinery. Okay, so here in this year itself we will have to make the calculations. Okay, what has happened? It is being told that on 31st March the machinery was sold. So let us take that. Sold for how much? For 29,000. When we sell the machinery, how do we write the journal entry? Bank account debited to cash account. How much? 29,000. Next, on 31st March, let us calculate the depreciation account. Depreciation on both the machineries. Both the machineries. Okay, the machinery on March 31st, the machine which was purchased, it was sold by end of the year. It means both the machineries were there in the organization for the whole year. That is 8,000 plus 4,000, 12,000 is going to be your depreciation amount. Next, on 31st March itself, children, we will have to calculate the profit and loss account. Why we have to calculate the profit and loss? Because the second machinery which was bought, it was sold by end of the year. We need to know whether we made a profit or a loss. To know that, what we will do is the working notes. Original cost of the asset. The asset which is sold only we will be calculating. The first asset, it is still in the organization, children. That is why we will get a balance C by D here. Okay, generally in case if there is only one machinery and if it is sold, with the calculation of profit and loss, both the debit and credit, maximum cases it will match. But here, because there are two machineries, though the second machinery is sold, but there is still the old machinery which is operating in the organization. That is why you will see a balance C by D. Let us calculate the profit or loss which is made on the sales of second machinery. Original cost of the asset, how much is it? 40,000. Less depreciation on it. For the first year, that is 2011, we don't have the second machine in 2011. 2012, how much did we charge in 2012? We charged 4,000. In 2013, on second machinery, we charged 4,000. So 4,000 in 2012, 4,000 in 2013. How much we are supposed to deduct? 8,000. So the value of the machinery in 2012 was 40,000. By end of 2013, its value is 32,000. This is the book value of the machinery. Now, how much is it sold for? You will have to less sales proceeds of the machine. So, though the machine is 32,000, we sold it for 3,000. It is a loss of 3,000. Losses are always written on the credit side, children. So, how much is the loss? 3,000 we will write. Now, do the total of both the sides. 1,02,000. This side, there is a deficit amount. Why we have it, I will explain it. We will have a deficit amount of 58,000, children. When you add 29,000, 12,000 and 3,000, you deduct it from 1,02,000, you will be left with 58,000. 58,000, why we are left with a balance of 58,000 is because this is the value of the first machine which we bought for 80,000. Now this balance C by D for the next year 2014, it will become as balance B by D. With this we will close the solution because we are asked to make it only for 3 years. We are done. 2011, 2012 and 2013 we have shown. Now 2014, the first machinery's worth which is running in the organization is 58,000. If we see initially, it's a check. You can check whether your solution is correct or not. 8,000 minus first year depreciation. We have calculated it for 9 months. You will deduct that. Let us say we got 74,000. In the second year we used 8,000. In the third year also 8,000. Now deduct 8,000. The second year depreciation 66. Again deduct 8,000. You will be left with 58,000. So this is a check whether your balance C by D is correct or not. So this balance C by D 58,000 is of your first machinery which you have bought. After its value reduction every year, this is the amount in the fourth year. If this machine is also sold somewhere in the future, then you will calculate the profit and loss. A tricky sum but a beautiful one if you understand. Any doubts, just message me back, children. Thank you for listening. Have a good day.